Okay, you guys all come back. Let me take a look. Not yet. Okay, so is this everyone here? Yeah, I think so, right? That's everyone. Okay, so let's work together. Did I get any answers yet? Okay, so one group shared the information. Does any group have an answer? Please share it with us. Net income and the closing balance of the return earnings.
Do you want that in the chat or?
Yeah, in the chat so everyone can see. Yeah. Did you get enough time to work on it? Oh, so net income 11,900. Return earnings is 1090. Sorry, 10,900. Does any other group get the same number?
Yeah,
we didn't have time to.
11,900.
Okay. Okay. Cool. Okay, let's work together on this. Okay. So I'm going to prepare the income statement. Okay. Okay. So what should I do? The first thing, what should I do when I prepare the income statement? The first thing is I'm going to have the headings, right? How many lines of headings? 3. The first one is the name of the company, right? What's the name of the company? It's called One Planet Cosmetics Corp, right? Okay, that's my name of the company. What's the title of this financial statement?
Income statement.
Yeah, income statement. And now I'm going to talk about the period of time for the months ended June 30th, 2018, right? So this financial statement is about only 1 month period of the company, right? Are we good with this? Pretty cool, right? That's good. So now let's have, on the top, we always have revenue, right? Revenue is the first one. So it will be service revenue. Are you able to see my Excel sheet very well?
Yeah.
Do you want it to be bigger, or this is a good size?
That's good for me.
Good. Okay. So service revenue. What's service revenue? Let's take a look. So that's gonna be 24,200. Okay. Now, what are the expenses? Okay. What are the expenses? So I have different expenses, right? I have, okay, what kind of expenses I have? I have supply expenses, supplies expense. So this one is gonna be 2,100. I have interest expense. So that one is 800. I have office expense. This information all given, right? 1,500. I have, what else? Utilities expense. So that's going to be 1,500. I have salary expense. So that will be 5,700, right? Did I miss anything? Okay, so now here, my expenses will be the sum of this, right? So the next one will be my income before income tax, right? Income before income tax. So the revenue minus expenses, that is my income before income tax. And now, what's my income tax expenses? So this one is 700. So what's my net income? So my net income is 11,900. Very good job. Very good job. Okay. Is this clear? Is this clear?
Yep.
Good. Okay. Now, that's my income statement, right? That's my income statement. So next, we are going to do the statement of changes. So the statement of changes in equity. That's our second one, right? If you remember, once again, it's for the months ended June 30th, 2018. Okay, so I have some information here. I have a share capital. I have a returned earnings, I believe. Returned earnings. And I have total equity, right? Total equity. Okay, so what's my opening balance? Opening balance. So what's my opening balance for the share capital? Opening means the beginning of the period of time we are talking about. What's the period of time in this case? That's 1 month, right? In June. That's the month of June. So what is the opening balance of the month of June?
Isn't it 0? Just they
0, because it's a new company, right? Okay. Now, issue new shares, right? They must issue new shares. So how much shares did they issue? Can anyone tell me? How much share did they issue?
Was it 36,000?
Thank you. 36,000. Awesome. Okay, and then what is the net income? Right, net income. What's the net income?
Count.
We just calculated, right? 11900. Do we have a dividend?
Yeah, dividends declared 1,000.
Good job. Yeah, you declare dividend. Okay, so therefore you have this 1,000. Okay, 1,000. Are you guys comfortable with using Excel?
Still learning how to do things quickly with the
Yeah.
subtracting and stuff, but
Okay, so the point is make sure you try to learn it, right? It does help to make things faster, to make things easier, right? So make sure spend some time, and there are some useful workshops on this. Okay. Okay, so last dividend. Okay, now my total here. Okay, so total would be all this, the sum of all this, right? Okay, so what is the ending balance of retained earnings? So that's gonna be 46,900. Okay, so the answer 10,900. That's the difference is the 36,000, which is the common shares, right? Which is the common shares. So common shares plus return earnings, that's your total equity, 46,900. For return earnings, ending balance, that's 10,900. That's correct. Good job. Okay. Are we clear with this?
Yep.
Yeah. Okay. Awesome. So now let's do the third one. That one is called the statement of financial position. Do I have to do anything about this for the month ended June 31st, 2018? Do I need to do anything with this?
Yeah, it's for a moment in time.
Also,
right?
It's for a moment. It's not for the month. It's just for the day of the year end, June 30th. So this is the key difference of financial statement of financial position from the other two statements. Okay, so make sure don't mix up with this date here. Okay, so I should do left side. I'm gonna use it as a current. On the right side, I'm gonna do liabilities and equities. Okay, so I'm gonna start with a asset, right? And I will start with current asset. Okay, current asset. What will be in the current asset? So it'll be cash. Okay, so that's 15,000. Accounts receivable, that's an asset. 9,000. Okay, supplies, right? We know we talked about supplies, like office supplies. Those are current asset. And now I also have non-current asset, non-current asset, right? So that's gonna be equipment for 52,000. Okay. Okay. Are we clear with this? Do we have any questions? So my total asset will equal to my current asset and plus non-current asset. Right? So I still need one more step here. So I need to have a line just to inform my users what's the current asset. So that's pretty convenient. You don't have to crunch your numbers on the calculator. This is much easier. Okay. Total non-current asset. Total asset equals total current plus total non-current. Okay. Are we clear on whatever I'm doing on the left side? Yes or no?
Yeah, I think so.
Good. If you think it's good, I can move on. Sum up, so I can move on. I want to see how you guys doing. Okay, good. Yeah, awesome. Thank you. Now let's deal with the other side. Okay, that will be liabilities. Okay, and liabilities, you can deal this with first is accounts payable. Okay, so that's 7,300, and bank loan payable. Okay, 23,000. That's it, right? That's it. So your total liabilities is just this plus this. Okay. Now, equities. Equities, we know that two numbers, right? You know, common share and returned earnings. What is the number of the common share? Anyone?
36,000.
Yeah, 36,000. What is the closing balance of returned earnings on June 30th, 2018? Here? Yeah? So total equities equals okay, and then hopefully these two added together, it will be balanced. Okay, I'm really nervous right now. My heart is pounding. You probably have the same feelings in the exam, right? Okay, let's see. Total liabilities, and equity. It's going to be the two together. This plus this. Yay, magically, it's agreed, it's balanced, 77,200, right? Yeah, it's always good to see that, okay? It's always good to see that balance. Do we have any questions on this? Oh, it's pretty straightforward.
I think it's pretty clear. Will you be posting that on Moodle?
Yeah, I will.
Awesome, thanks.
Make sure I save it. Okay, so now we have prepared the three financial statements. Let's take a look at B. Explain why it's necessary to prepare financial statements in the ordered list in A. Okay, why did we first prepare income statement and then statement of changes in equity, and then statement of position. Do you remember what did I say about this?
Is it because all the information from the income statement can be used in the next ones down, like the income statement information you need for the statement of changes in equity?
Yeah.
You need that information for the statement of financial position?
Yeah, awesome, good job. So you can see the flow, right? The information flow, the red to the red, right? The information flow, and now I make this information, new information as blue, and these two numbers flowed here, right? Did you see? There is a ordered list, right? You don't start from anyone, right? You have to start with this order, right? So the numbers will feed in to the next one, okay? Does this make sense? Yes or no?
Yep.
Okay, good. All right. So I will post this. I will save this. Okay. Now let's see if you remember those ratios, right? Let's analyze. Let's try a current ratio. Do you remember what's current ratio? Anyone remember what's current ratio?
Wasn't that like total assets divided by total liabilities?
Yeah, you are getting close. You are close, but not technically speaking, not accurate. But you are very close.
Total assets divided by total
Current
liabilities and equities?
No. Again, you are on the right track. Yeah.
Current asset divide current liability.
Thank you. Current asset divided by current liability.
1 point for you, D.
Pardon me?
No, nothing.
Okay. Yeah, so that's the formula we use, right? We use current asset divided by current liabilities. That's what we call current ratio. In this case, do we know what's your current total asset? Sorry, total current asset. 25,200 divided by my current liability. Maybe I have bank loan. Is that current or long term? I don't know, right? I don't have more information. Let's assume this is current. Okay. So your current liabilities would be these two sum. Okay, so 0.83. Okay, so otherwise, if this is considered long term because the balance is very significant. So you can also go like, okay, so maybe I should do instead, I should really recognize this portion as a long-term liability because the balance is quite big. So then you have the option. So here would be just give me 1 second. So here you're gonna have current liability and your total current liability. Okay, and now here you are going to have, okay, so you are going to have long term. If suppose this is long term, okay? Suppose this is long term, so you're going to say, okay, non-current liability. And now here we need to have down. Enter. So you're gonna have a total non-current liability. So let's assume this bank loan payable is long-term. We don't know, right? Really depending on you see the contract, whether it's long-term or short-term. Suppose this is a long-term, okay? So then you have to further classify liability into current versus non-current, okay? So in this case, my current asset is still 25,200. My current liability is 73,000. So my current to debt ratio is 3.45. Okay, 3.45. Is that good or not?
That's real good.
Good, right? Because it's more than one, right? More than one. You have more current asset than current liabilities, right? And then you remember what's your working capital? I think you remember that, right? Working capital.
Current asset negative less current liability.
Oh yeah, very good. So you have current asset less current liability. Current asset here, current liability here. Okay, that's your working capital. Let's do a solvency ratio. What's the solvency ratio? Total debt to asset ratio.
What?
So that's going to be total debt divided by total asset, right? What is my total debt? What's my total debt? Here, 30,300 divided by my total asset, 7,200. So that's 0.39. If you prefer the percentage, I can change this to be a percentage. Okay, let's see how can I change this to be a percentage. Okay, so 39.25% are debt. That's not bad. Okay, so the owner owns 70%, 60% equity. That's a good news. Okay. Anyone have questions with these three ratios, calculations?
Nope.
No? Okay. Okay, so now let's do a analysis on probability. Do you remember what are the ratios for probability analysis? Profit margin. What is profit margin? Equals what? Net income divided by what? Look at my screen. I give you a hint there. Net income divided by
Sales.
sales. Thank you. Sorry. So that equals, what's your net income? You calculate it here, divided by your sales, service revenue. Okay, you get close to 50% profit margin. That's pretty good, right? So every time you sell $1, you make 49 cents. That's a good margin, very good margin. Can we do gross profit margin? Can we do that? Can we do a gross profit margin? Yes or no?
Yeah. Wouldn't you just put the gross profit instead of the net income?
Yeah, good. What is the gross profit in this question?
Is it 24,200?
That's sales. 24,200. That's sales. So for merchandising company, sales minus cost of goods sold, that's your gross profit. So in this case, we are not able to calculate the gross profit margin. Why?
Because we don't have cost of goods sold.
Yeah, we don't have cost of goods sold. This is not a merchandising company. This is a service company, right? This is a service company. They serve you, they are selling their hours to you, their time to you, right? They help you solve a problem. You pay them for their time they used, right? So they are not selling your product, right? So there's no cost of goods sold, okay? The other one we have, what's the other one for profitability analysis? Margin, okay? Profit margin, gross profit margin, and there's one last thing for that.
Earnings per share.
Earnings per share. Do we have enough information to calculate earnings per share?
No.
No, yeah, that's right, no. Okay, so that's all the analysis I can do. Now, too bad, huh? For the first month of our operation, these numbers seems pretty strong and positive, right? So first month, they make almost $12,000. That's a good job. I wish I can make $12,000 a month. The professors, they may sound like they will pay a lot, but then there's a lot of deductions, right? We pay for our health plan, we pay for this, pay for that. At the end of the day, there are not too many money left when you receive the paycheck. Yeah, even like if you get $7,000, if you get $7,000 after all the deductions, that's pretty good. Okay. Yeah, if you want to get a net income of 12,000, like get on your hand, you have to make $200,000 a year. So you have to make $200,000 a year in order to get a monthly of around $10,000 cash on hand. Okay. All right. Do we have any questions? If you're good with this answer, sum up. I want to see how you guys doing. Sum up if you think you understand what I'm doing here. Okay, awesome. Oh yeah, I think almost everyone react to that. Awesome. I think you learned something hopefully today. If you don't have any question, that's all I want to say today. So basically, I just want to remind you guys about the practice quiz. I think the midterm, is coming soon. Not very soon, but it's definitely coming. The exam one. There is some practice quiz. This practice quiz will not be graded, but you will have access to the solution after you attempt it. Okay, so make sure you attempt on the practice quiz. Once you attempt it, whatever the mark doesn't count, you can see the solution. Okay. All right, that's all I can offer today. So I hope you guys have a good day. And if you have no other questions, the class is dismissed.
Thanks very much.
Thank you.
Have a
I
wonderful
have a
day,
question.
everyone. Take care.
I have a question.
Yeah, I'm waiting for you. Yeah.
Thank you.
Yeah, so no problem.